take over now, Alexander. Just to say that Alexander is also one of the organizers of the ACCESS.SPACE Alliance. Thank you so much, Alexander, for taking care of this Financing Small Space panel. So Alexander is a space lawyer from Belgium and helping the ACCESS.SPACE Alliance. You can start now.
Thank you very much. Do you hear me well? Okay, so thanks a lot, everybody, and thanks, Tony, Betty, Camille, and Christian for organizing such an amazing event, and thanks to New Space Capital for sponsoring the conference. As you know, as we know, access to space and necessary infrastructure has survival value, because we will never be able to live on this planet forever. Having said that, on the downsides, space is also able and to fulfill a short to medium goal to live on this planet in a more sustainable manner. Space can achieve any and all of the 17 United Nations Sustainable Development Goals. But to achieve these long-term and short-term objectives, we need money. And that's what we're going to discuss during this panel session. So that's why we at the Alliance are looking at the issue of space financing very closely. We had a good webinar organized last month to discuss this, looking at this from a public perspective. We have a finance committee which you could join, which is going to be the operational committee for finance related activities. And we have now a dream team in this panel to discuss this issue, looking at it from a private and public perspective. So I want to start with introducing yourself. You will have 5 minutes to express your views, not more than 5, and then we begin to go into the Q&A session. So if I can ask Gonzalo Martin de Mercado to join, to start with his views. Gonzalo has a Master of Science on Telecom Engineering, and is part of the European Space Agency team working on finding space solutions, and is working with startups and SMEs on finding new procurement and financing mechanisms. So Gonzalo, you're well placed to address this issue from the public perspective. The floor is yours.
Very good. Thank you very much. First of all, can you hear me well?
Yes, we can.
Very good. So thank you very much, and thank you to ACCESS.SPACE for inviting us, the European Space Agency, to this very exciting conference. I have to say that there have been a lot of very interesting things. So as Alexandre said, I work in the European Space Agency in a unit called Space Solutions, and what we are doing is to try to support small businesses to gain access to space and to try to do stuff. So I'm going to be very brief on this presentation that you see here. So the very first thing, I think that ESA doesn't need presentation. So ESA is an intergovernmental organization, belong to 22 member states across Europe, but also Canada, Switzerland, and Norway, and also the UK as much as that. And what we do is mostly to finance research and development, big missions, big technology, all this kind of stuff. And but we have also financed over the years technology for a lot of small companies. And as a matter of fact, 96% of the successful companies in the portfolio of ESA are SMEs, which is quite a very big number. That doesn't mean that the big companies do not actually succeed. It's just that there is a big number of SMEs working in space and working with ESA. What is not totally known to the people is that ESA does more than just research and development, and this is the objective of my group. What we do in Space Solutions is to try to talk the language of private investors. We are trying to move from pure research and development, where you are trying to develop IP, technology, trying to advance for the good of mankind, trying to develop the next big thing, into products and services. So we have basically adopted a motto, which is that if you don't sell, you don't innovate. And this is what we are trying to do in Space Solutions. We fund typically small companies. As a matter of fact, 98% of our portfolio in ESA Space Solutions is SMEs. What we are doing here is to give them money in order to crush their business plans and try to see what they can do and try to develop their prototypes to try to perform the first sale. And in order to do this, we also give them access to our remit of programs where we can give as little as 25K for those entrepreneurs that would like to join a business incubation center, up to 2-3 million for those people that would like to have a big development, to have prototype and going into market. And if you have a look to the right part of my screen, it's not casual, the fact that I'm also putting on blue our remit as ESA, but also the names like acceleration, angel and corporate venture, dev and alternative finance, because one of the things that we are actively doing is to try to promote these companies into private investment. So private investors can actually see this deal flow early. And if they might decide to invest on it in order to help them to grow. And before moving forward, I have to say, this is not financial advice. We are not an investment institution. Therefore, in the end, we introduce, and then it's up to the investors and to the companies to sign deals. We basically put ourselves aside. But apart from giving money, one of the things that we do is also to try to sponsor this networking, as we're saying. And one of the instruments that we put is what we call the ESA Investor Forum. The ESA Investor Forum is, we bring companies and we bring investors and we try to match it together. We started with this quite some time ago, but it was not very successful. We relaunched it like 5 years ago, and we noticed that there was a demand in order to try to show the investment community what the space can actually do. A lot of investors thought that the space is about science fiction, trying to do lots of stuff that is not investable. And by means of these actions, we are bringing more and more to the awareness of the private investment that the space is innovative, space sells, and there are opportunities there. So we have basically matched some of the companies that you see on the left side of my screen with some of the partners on the right side of my screen, and through them, they have been able to raise capital, in particular some of the most successful companies that we have here, ISAR Aerospace, ISAI, Kairos, and others like Lilium that are recently joining SPAC and is actually like very successful. The organization asked me basically to conclude talking a little bit about Agenda 2025. As you know, we have a new Director General, and he has developed what is called an Agenda 2025 in order to set up the priorities for ESA for the next few years. And these priorities are going to be the ones that you see on the screen: the strengthening of ESA-EU relationships, but not only the European Union, also the relationships with all the governments that are not part of the European Union, including the UK, Canada, Switzerland, and Norway. We are also trying to boost commercialization from a greener and digital Europe, strengthen space for safety and security, address specific problem challenge, and complete the ESA transformation. Okay, all this is very high level. How this translates into specific actions to space? Well, first of all, in boost and commercialization, we are going to try to focus very much on new space and downstream applications. And the objective is to try to be faster, more agile, and being into that, and addressing one of the old things we have been thinking, how ESA can become a customer for some of these organizations so they can actually show credibility in front of investors. Another area is safety and security, where we are going to work in collaboration with big players on utilization of GNSS and cybersecurity. This includes governments, organizations, and we are here trying to open the door for all these organizations, and particularly small space players, to have access to difficult customers like governments, European Union, associations, and try to sell their products in this space. And the final thing is address program challenges, which in particular is how to maintain the independence of Europe in the domain of launches, how to address universal connectivity, and how to continue with the space exploration and make this investable, affordable, and attractive to investors, and also to attract companies and business. So that's my very brief introduction. Thank you again for access to space. Looking forward for the panel. And the space is the limit. Thank you very much.
Thanks a lot, Gonzalo. And it was really impressive to see how much the agency is doing, and even that your new director general is taking this issue very seriously, and even, I think, if I'm not mistaken, offering to his expertise to startups. So now I want to pass the floor to Pierre Festal. He's a partner at Promus Venture. He's in the good position of having closed, if I'm not mistaken, at 78 million, his first round. And Promus has made amazing investments in the past in the space and non-space sectors. And so we're really looking forward to know what is the view of a venture who is specializing in this sector. Thanks, Pierre.
Thank you, Alexandre, and happy to be here, and thanks for having me. Well, actually, to your point, we've moved on from that first close. We did a third close of the fund at about 120 million. Not so long ago. We have until the end of the second quarter to do a final close on the fund. So we should be, I think it's just still a bit too early to tell as to where we're going to land from a capitalization standpoint. But certainly well on our way to having one of the largest funds, one of the largest early stage funds in the sector. Our mandate, just so the audience and the panel here understands, what we're doing, who we are. So just as a reminder, we are Luxembourg-based GP called Orbital Ventures. Orbital Ventures has partnered with local LPs as well as European LPs for this fund, which specifically looks after the new space category. And we have a pretty broad definition, and that definition is part of our mandate, and what we are interested in is anything that leverages a space technology to build innovative products and services. And those products and services and those companies we end up investing in can address any problem in any vertical, really, as long as they're leveraging a technology that's been either developed first in the space industry or a space technology in and of itself. We are looking to invest in primarily seed and Series A companies, and then selectively into later stage companies. 2/3 of what we do is within the European Union, and then 1/3 is outside of the European Union. To date, we've invested in about 4 companies, 2 in the US, 2 over here in Europe. We're in the process of doing our 5th deal, which will be in Europe as well. And we write checks, ranging from like €1 million all the way to 4 or 5 million euros. It's kind of the first investment, and have ample reserves for follow-on investments. What we're particularly excited about is, really what I mentioned, companies, and we're seeing more and more of these companies leveraging a space technology into a product or a service to solve a particular pain point, usually in a large market. And the markets, we end up participating in, or the startups we invest in tend to participate in, are very large, very mature, slow-moving, kind of asset and infrastructure-intensive markets that those companies, by bringing those space data sets tend to provide a layer of intelligence and data on. And that's, most of the companies we've invested in so far are, within that kind of category or definition. When it comes to the upstream side, that's something we're obviously looking at. That's something that Promus Ventures, which is the US-based general partner that also manages Orbital Ventures, has been doing and has been investing in the space sector for a number of years now. And we've backed companies like Rocket Lab and Spire and ICEYE on the upstream side. We remain, relatively excited about the upstream side of things, but I think right now we're seeing a lot of very high valuations, particularly on the constellation side. Small launch. We've already placed our bet there with an investment in Rocket Lab. So we tend to be a bit more cautious when it comes to the upstream side, because we're really seeing the benefits of the space infrastructure here back on Earth today. And we think that's where most of the value is going to be created from a financial standpoint, but also from a kind of social and economic standpoint over the next kind of 10 to 15 years. So that's really what we're about. We like these platform companies that, again, are leveraging or using a space technology to address other problems, and can start in the space sector, but can be expanded into other verticals and sometimes larger markets. And most of the investments that we've made to date tend to fit that description as well. So I'll pause here. And I don't know how we're running this, but I guess, happy to answer any questions either now or later in the session.
Thanks a lot, and really impressive to see that you are successful on the market, and really interesting to see what are your aspirations. So I want to pass the floor to Bogdan, who is the CEO and managing partner at New Space Capital. And again, a big thanks for sponsoring this conference. So New Space Capital is also a Luxembourg-based firm, focusing more on private equity, and has invested already in space and related industries. So Bogdan, the floor is yours.
Thank you very much, Alexander. And yes, look, it's our pleasure to sponsor such a great event. And thanks a lot to ACCESS.SPACE to put in this together. It's a great platform. Great to see all the familiar faces. And well, just very shortly on New Space Capital, as I'm really keen and looking forward to our joint discussion, is New Space Capital is a growth stage fund. So we are focusing on the growth stage companies. So for, while Orbital Ventures, Promus, they're just doing more early stage, so we kind of carry on. So our job is to fill in the funding requirement between the earlier stages and the exit. So we do C plus pre-IPO rounds. Actually followed some of the investments that Promus did. So we invested in ICEYE at a later stage. We are writing typically 20 to 30 million euro checks. We based in Luxembourg, GP, and we are focusing on the applications and on the supply chain. And to Pierre's point, we think that in space operations and infrastructure, specifically, the launches and the constellations right now is significantly financed, and it is reflected in the valuations. At the same time, that part of the market is it's long term, it's long payback. It's quite risky from the regulatory perspective, and from the technical standpoint, there are still significant market risks built in. But then on the profit margin side, it's kind of still questionable where everything is going to net out. But at the same time, if we're looking at the upstream, so the supply chain, there we see very interesting convergence of the space supply chain with the terrestrial supply chain, simply because most LEO constellations are operating within the magnetic field of the Earth, so they're protected from the radiation. Therefore, using kind of the batteries, the electronics and other components that can be used in other industries, but are driving a lot of the innovation. For example, edge computing, proximity operations, LiDARs, and things like this. So it's a lot of the most challenging technical requirements come from space that are driving innovation that then can be applied to larger markets here on Earth. And so we see a lot of interesting things in the supply chain, and also really interested in application side. Again, to Pierre's point, that exactly to what he said, it's the question of using space to solve the problem here on Earth. Market is here. I mean, any given time in space, we have about 12 people, and on the Earth, we have 7+ billion. So the market is here. And also it is very interesting to see, again, convergence of the digital businesses and space. And effectively, space just becoming sort of a back office, where people outsource a lot of the data generation and kind of then just using these huge amounts of data to solve some of the earthly challenges. And both supply chain and applications have very nice, healthy margins. These are segments that are significantly underinvested at the moment, and therefore have much more attractive valuations. And it's the universe of the small and medium enterprises. Some of these enterprises been in existence for many years. They have a very good track record of hitting the milestones, of implementing their business plan. And they're just simply facing right now a rapidly developing market and require working capital for it. And so here we can rely on their past performance. We can rely on their profitability. We have the history of their profit margins. We understand that there is, limited technical risk, limited market risk, and it's all about execution. And by focusing our investment and our efforts on the teams that have leading technology and leading market position, we are helping investors to channel their funds into the companies that can become the champions of this new ecosystem. So that's in a nutshell. And as I mentioned earlier, really looking forward to our discussion.
Thanks a lot, Bogdan. Really interesting to see your perspective, similar but not identical to Promus perspective. And so now I want to pass the floor to Rainer Horn, who is a managing partner at SpaceTec, which is a strategic consulting group. Is also, if I'm right, an investor in space startups. And SpaceTec has been a driving force behind a study on the future of the space sector, which has been looking at ways to boost investment. So he's well placed to educate us on what needs to be done to boost investments in the space sector. Thanks a lot, Rainer.
Thank you, Alexandre, and thank you, Tony and team, for including me in this panel. Looking forward to contribute to it, and hello to everybody else. Of course, we know each other all personally, not meeting in conferences right now. I'd like to give a quick intro about SpaceTec Partners and SpaceTec Capital, where we're from. Personally, I've been active in the space financing arena since 14 years now, mostly on an angel and the deal arrangement area. Let me just see how it moves. So quickly about SpaceTec, it's based on the experience that we have in SpaceTec Partners, the consulting firm, very international firm with 18 different nationalities, serving institutional and private companies alike. Also a number of startups and grown-up startups, and some of them are very grown up, and we met them already as coaches in the very, very early days. We're working along the service chain of the innovation and the finance, working on innovation schemes, prize schemes, helping ESA BICs and accelerators getting started, but also working as investment advisors for VCs, private equity firms, or on the sell side accordingly. I wanted to bring something to you today to show how the ecosystem has developed over the last years. You can see here what is currently the network of private instruments, public instruments, all along the funding chain. This has developed over the last 10 years big time, and I have some evidence for that. This is a picture I presented approximately 10 years ago in the when the European Commission was first talking about space financing in the context of Galileo. we were bringing together, there was very little outside the ESA spectrum, and the investment forum had a different logo at the time, but there were certainly no VC interested in this topic whatsoever. And the European Commission was evaluating whether they should do some risk capital fund on that area. So now we have been monitoring this over the last 10 years, and this is the current picture of today. You can see how many logos have been added. Of course, it got a bit more beautiful over the years, but you see alone the number of business plan competitions, incubation, and acceleration schemes that are filling the pipeline in Europe alone. You have national funds and regional funds who are engaging, co-engaging. And finally, we have now a number of specialized VC firms that can, in different stages, from the angel side, crowdfunding, all the way to A round and later stage, provide capital to it. Some of the companies on there, especially on the generic venture capital side, I personally spoke to 2 of them already 14 years ago. They didn't take anyone serious talking about space. Obviously, the world has moved on since. And you also see a number of corporates at the bottom that you probably would not have expected being active in that field in any way. Now, at the same time, we have seen activity at the exit side. Some startups, also these are all the European companies that are currently listed on a stock exchange. You can see that they have taken creative routes to go to the stock exchange. Obviously, there's a more creative one with the SPACs now. Let's see how long that lasts. But all of them have grown in value, some more, some less. Yeah, that was my little talk for the contribution. I look forward to fruitful discussion now. Thank you.
Thanks a lot, Renier, and really interesting to see the data coming from your long experience in this area. So I'm to pass the floor to Jason, who is a director at ACCESS.SPACE Operations and also has past experience at the European Space Agency, and is going to look to the funding roadmap. So Jason, the floor is yours.
Great, thank you very much. Alexandre, can you please share my presentation? I'm having a technical issue here.
Alexander, you have that? Did you send it to me, Jason?
Yes, Tony is a guru.
I'll get it. I'll find it. I think
While you're trying to find that, I will start anyway. So yes, thank you very much for allowing me to be part of the panel discussion. Actually, if we had moved this conference by let's say 2 weeks earlier, then I would actually be giving Gonzalo's presentation, because I essentially was former ESA up until Friday. So this is actually my very first presentation where I'm talking about investment from my own personal perspective. And if we scroll to the second page, please. So as you, as the panel know me very well, and various other people in the space sector know me, I can be quite, let's say, controversial when it comes to these things. And there's really there's a couple of things that I really want to fire off this panel discussion about. Well, the first thing is about public financing. And as we see, what we're seeing at the moment is that there are, in terms of public activity, there's an awful lot of money out there, public finances, whether it's from the European Commission. In particular, you've got the Cassini Fund, which is an impressive €1 billion activity being deployed out of InvestEU. But also, as Gonzalo mentioned, you've got the stuff that ESA is doing, and also that Rainer mentioned in his presentation as well, which is basically the space solutions and also the Phi Lab, which amounts to well over 200 million euros deployed, certainly over the last, let's say, 10 years. And I was lucky enough to be a part of that, where some of the businesses that Gonzalo mentioned in terms of that we were able to bring to the ESA Investment Forum, those were some of my businesses that I brought to the table. But anyway, the point is that you look at the European level, at the European activity, but also there is a national agenda as well. There's lots of national activity going on in terms of space, whether it's Luxembourg, France, Germany, and I'm based in London, so I will naturally talk about the UK. And in particular now we have the British Business Bank which has launched the Futures Fund, and there's a future follow-up fund where you're getting tens of millions, if not hundreds of millions, into the development of the space program. And in terms of the national agenda, if you look here in the UK, you've got something called the Integrated Review, which was released in February, which is where space is an underlying national concern. And so because of that, you are going to get that's going to drive job creation. That's going to drive the creation and fostering of investment, or driving investment into the local space sector, and also driving the technological advances that you have seen over the last couple of days of at this conference. Okay, we can move to the next slide, please. Okay, so we're all, as you're all here in this panel discussion, and we're all very aware of the amount of money that let's say public capital, private capital that's in the sector. But what's of interest is really let's look at what's going on actually in terms of private equity in general. So during this meeting, we've talked about seed investment. We've spoken about SPACs and to a certain extent, but also there's also all the other stuff in between. One thing that hasn't been mentioned is COVID, and in particular the bounce back. But if you look at the data, the private equity data over the last, let's say, 3 years, you'll notice that actually, you know what, already 2021 is already starting to become quite a record-breaking a year in terms of private capital that is being injected into the private equity system. And in particular, we're seeing that over the last 3 years, the seed and the angel deals have remained pretty resilient to COVID. But what we're seeing now is a massive increase in deal sizes around the significantly later stages of private equity. To a certain extent, there is a bit of, I would say, a bit of SPAC hysteria, slightly inferred by Rainer, and that's really because if you look at the SPAC data, already in 2021, I would say, we can say that double the amount of funding or private capital has gone into SPACs this year than the last couple of years combined. And that's proven to be quite interesting and quite sexy for the sector. In particular, if we look at the aerospace related SPACs listed in the system, there are about 18, but out of those 18, 11 are actually space dedicated. And we already know that there are at least 2 on the way this year. So in terms of the SPACs, it's going to become quite an interesting, another record-breaking year. But let's look at the funding side of things. Well, okay, I can say that I was ESA last week, and this week I'm HE Space, so I can't not talk about the big problem for GPs, or general partners, which is essentially active portfolio management. At the end of the day, we're investing into business to make them grow. There's an equity growth there's an equity growth driver, which is our legal commitment to our LPs. And the issue that we have around that is essentially is as I said before, active portfolio management. And what underlines active portfolio management has to be manpower. There's been lots and lots of interest in this conference, but one thing that we haven't spoken about is really the skills. And really, there needs to be a driver of the skills agenda. How can companies like myself, HE Space, how can we partner with the VCs, with the investors, to actually support them in terms of active portfolio management? How can we help them get the manpower, whether it's the engineers, the guys doing operations or the operational activities of business, and also senior and mid-level management as well, so that we can actually grow these businesses successfully. Okay, next slide, please. And then so for me, the first thing is really we need more skills. And the second thing is my big bugbear about the whole new space sector, whether I was at ESA or not, is that, well, actually, this term has been used since 2007. Okay, so new space is hardly new anymore. And so there has to be a need for a new narrative. And if you look again at private equity, and you look at what's driving private equity, time and time again, you will see these acronyms: ESGs, SRIs, or impact investing. And we've spoken about sustainability, we've spoken about greening, all that sort of stuff in the various other panel discussions that have gone on today. But when we start talking about, okay, what are the LPs asking for in terms of their portfolio management, sustainability, ESGs, SRIs, they're all interchangeable. They're all the same essentially things, and the funds that are being created and are closing around sustainability are actually increasing, right? The significant amount of funds, including this year as well, is going to be quite a stellar year for these types of funds. So the question is now, should we be creating a narrative around sustainability and space? And if so, we've got to focus on not just the technical side, which is essentially the application of the space technologies on sustainability, or ESGs, in particular the remote sensing. But we need to we need to invest in targets and create investable portfolios that are focusing on other parts of the value chain. For example, the fundamental science, supporting the fundamental science to figure out what the root causes are of ESGs and environmental damage. The other thing that we should be looking at, and also I think has not really been addressed in this conference so far, is greening of space technologies as well. We talk about huge amounts of technology development, in particular the supply chain that Bogdan was mentioning, but these are not particularly green activities. And so what we should be looking at is investing into the operational side of things. Once we have figured out a brand new narrative in terms of, let's say, greening and space, we can also use that to draw skills into the space sector. So really, those are my sort of controversial things in terms of trying to make the private sector a bit more attractive. But ultimately, it's creating a new evolution for the satellite industry or the space industry. Okay, that's enough.
Thanks a lot, Jason, and it's good to look a bit outside of the box and compare the aerospace with the space sector, compare the public and the private side, and also focusing on the skills, which you rightly pointed out is really key. And I would add also on your point about sustainability that the targets we have at the EU level, 30% of the investments must be for the Green Deal, 20% of the investments must be for digitalization. That will play a large role in the way money is dispensed, and I think we are witnessing a similar trend on the other side of the Atlantic, and I would not be surprised that the Joe Biden administration takes a similar approach. So we may have similar approaches on both sides of the Atlantic. So thanks a lot, and I now pass, last but not least, the floor to John, who is a partner at Phil Fisher, an international law firm. He's the head of the Space Group and a leading advisor on transactions. So he's going to look at it as from a lawyer perspective. What are the key transactions in the sector? So John, we're looking forward to receiving your views.
So thank you very much for Tony, Alexandre, for setting up this panel session. Delighted to be joining you today. As Alexandre said, I head up the Space and Satellite Projects team at Field Fisher. We are one of the international law firms that has a particular specialist focus in the area. We have around 25 offices around the world, 1,700 staff, been working in this sector for 25 years. So I hope to be able to offer some insights from the sort of transactions that we've been involved in over that time. And as you'd probably expect, we cover all the key areas for legal and regulatory support for the sector, covering finance, investment, M&A, commercial contracts, regulatory, licensing, IPR, etc. And we work extensively with space clients from the UK and Europe, across the US, and well beyond that. I think what I was going to focus on in particular was how we look at supporting clients, how we can help space businesses get the financing deals closed. We've heard some great thoughts from the previous presenters on the areas of space sector which are particularly interesting right now. We've certainly heard how there's investor appetite which has grown significantly over the last 5 to 10 years. But translating that into sort of a fully fledged financing deal is something that we focus on particularly, and that spans the early stage business, the seed activities, starting out with founders, friends and family, angels, looking at the various grant funding opportunities, moving on through the Series A, Series B, pulling in the VCs, and maybe in due course the private equity providers, and then looking through to exit, IPO, SPACs, subject to the comments that were made earlier. And I think you'll see when you have access to the slides that what I've tried to do is to pull together, if you like, a top tips on how to ensure that your space business is investor ready. And I think from our experience, there's a lot of valuable homework that space businesses can do in order to prepare themselves for these transactions, whether it's seed round or beyond. The fact that you've done it before is helpful, but each transaction has its own particular features and elements that need to be dealt with from a legal point of view. So I guess the core of it starts with the corporate documentation, looking at the constitution of the company, making sure that is all clear, coherent, consistent. The shareholders agreement defines the rights of the existing shareholders and helps the investors to understand what mechanisms, what processes are required to take on the new investment. Director service contracts, many small businesses maybe have not seen those as a priority, but that would certainly be expected by many investors from seed round onwards. The business plan itself, previous speakers have focused on that, and that will always be a big issue for the incoming investors. And then underlying it all is the quality and the legal robustness of the technology and the intellectual property rights that these businesses represent. One of the key issues that we see regularly needing attention is ensuring that there's appropriate ownership rights established for the company itself, particularly where a number of founders have come together, perhaps on an informal basis, and certainly in the early days haven't appreciated the need to ensure that the business itself owns and has the rights to use the intellectual property rights in question. As the business matures, the supply chain contracts, the customer contracts will need to be clear and robust, so that the investors can see that they represent an effective allocation of risk and reward. For many of these businesses, there will be regulatory and licensing issues that need to be bottomed out. And in many jurisdictions, the business may well need to be looking at appropriate tax benefits, either for the business itself or for the entrepreneurs and the investors.
John, can can I ask you just to wrap up a bit, because we're going to enter in the panel discussion as soon as possible.
Yes, of course. I think the tax benefits were really my final point on that. So that, I think, hopefully gives these businesses a bit of a shopping list, some homework to do to make sure you're fully investor ready. Thank you very much.
So thanks a lot, and it's good to have a broad view on all what needs to be done to be prepared to receive financing. So really appreciate it. So now I want to enter into the panel discussion, and because we have really the top experts online, so it's a privilege, I think, to just to start. And I'm really interested to know what needs to be done from a policy perspective as well. And because the Alliance is in the goal of advocating and maybe with others about what needs to be done. So if I would ask you, if you have an idea what one thing or two things you believe needs to be done to increase access to capital in Europe, what would you suggest? What do you recommend? And anyone who wants to intervene is welcome.
Okay, I'll start it off. For me, it's clarity, right? So that's why I was quite controversial. So you need to have a hook. There needs to be a narrative in terms of how you are going to draw in public and private capital. And what better narrative than job creation? What better narrative than driving sustainability?
Anybody else?
Well, I'm going to take the floor here. Well, also from the side of ESA, and this is also part of our Agenda 2025, as a matter of fact. But one of the big problems with a lot of space companies, particularly the small one, is the lack of access to customers. So one of the things that we are discussing internally is how ESA, as the most visible space agency in Europe, can actually become customer of some of these organizations. But having in mind that ESA should never be the only customer, and by no means should be the biggest. So it should be an incentive to basically convince the private investors and private actors that there is business behind the things that the companies do, that ESA is purchasing their products and services, not just for the sake of purchasing them, but also because they are useful, in order to show this.
Thanks a lot. And Bogdan, you want to intervene?
Yeah, Alexandre, actually, look, I wanted to continue along the lines that Gonzalo mentioned. I think what would be really good from the policy perspective. And look, first of all, Europe is already doing a lot, but also what more can be done? And it is very important that the small and medium enterprises they have customers. It's much more important than investors. Because investors only will come if customers exist and if customers are there. But it's some indication in terms of where we expect the market to develop and what are sort of challenges those large institutional customers and government customers and supranational customers are looking for, so that there is understanding in terms of, okay, what would be required in 3, 5, 10 years time. There is something similar existing in the US, the NASA roadmap, where it's very clear that, look, okay, we would be looking for these types of technologies in 10 to 12 years time. So that people are not start doing something early on, too early or too late. And also if some of the key stakeholders, cornerstone customers like ESA, see how different teams can work together and bringing them together and working on something. Right now, on some of the market segments, European market is over-fragmented. And it's just important to kind of help people to work together more efficiently and work towards the same solution. And ESA can play part of that role, but also some other very large customers, like Airbus and others can play that role.
Yeah, and I think it's linked to Jason's point about clarity as well, and it would be good, I think, maybe to your point, to know where Europe can lead and where we have to focus our investment efforts. So any other idea on what needs to be done? Or I would be interested also to receive your perspective, Pierre and Bogdan and the others, about whether from your perspective it's good to know that that there is public funding in the company you are investing as a private entity. Is that a good news or a bad news? I mean, do you like your target companies to be supported by public fund, or playing the devil advocate, you feel there is a risk that they will not deliver and focus on revenues?
Non-dilutive financing is always a good thing for us. You get more money at a little to no cost. So everything that we can get access to in the non-dilutive section and category is definitely of interest to us. At the same time, we also invest in companies that will, in an ideal world, do not need public investors and government action to kind of survive, because we just can't. This is not something we should be counting on, nor something we can predict. Therefore, our investment decisions cannot be predicated upon the presence or lack of presence of the government to government money and public sector support to help finance our portfolio companies.
I think if I can just add a comment there, I think from our perspective, what we're seeing is that there are two very effective channels for space business finance. There is the public institutional funding, as Pierre was describing, the non-dilutive chunk, and then there is private funding, but they operate in many cases alongside one another rather than together hand in hand. And I think from our perspective, one of the challenges perhaps in looking at some of the UK and European Space Agency funding is perhaps the time it takes from application to receiving funding. Not that the funding is not valuable, but the business has to be very patient in engaging with the agencies, and in the meantime, private investors may be holding back if they're looking at that, tapping into that non-dilutive finance, and that tends to hold the business back.
Big Reiner, you wanted to comment.
Yeah, I think the important part is that you
intelligently. Now, Alexander, we are over the time. Sorry.
Okay. I just want to say it's important that you sync the funding between these partners, the private and the public side, as much as possible, to make sure the startup is flexible enough to execute and can start that grant or the contract very soon, and is not getting distracted too much if they are pivoting their business model one way or the other. If you look at the lead times that some of these things take, the startup will be either have changed its business model or will have moved other priorities before they actually started, and then they have to continue executing along those realms. So flexibility and better thinking is necessary.
Any other ideas, or
Alexander? We have to stop now. We are over the time. Sorry.
Okay.
Sorry.
So thanks a lot for a great discussion. And as I said, the Alliance has ways to continue the discussion, including the Finance Committee. You're welcome to join, and we can maybe even try to draft a white paper on what needs to be done for the space sector. So really thanks for the really interesting discussion, and the floor is yours, Danny.
Okay, so thank you, the panelists and the panel. Alexander, thank you very much. We'll see you soon.